Hello, everyone. Good to see you on this Tuesday afternoon. So I'm doing things a little bit differently today, as you can tell. But if you have, today is going to be, I'm going to be talking a little bit about the four main loan types. And we're going to be, so if you have questions about the FHA, VA, USDA, or conventional loan, go ahead and put them in the comments, especially if you're watching this live. And we're going to go ahead and jump right in. So I know that a lot of people are of the mindset that they need 20% down in order to purchase a home. Like that's just kind of, oh, you need, let's save up, get 20% down, and we're going to buy that home, you know? Well, today I'm going to be kind of debunking that a little bit, because you actually don't need 20% in order to get a home loan. So we're going to also briefly touch on the four main loan types, which I mentioned earlier are the conventional, the FHA, the VA, and the USDA loan. So we're going to be going over each loan type. I'm going to be letting you know what the current minimum required down payment is for that loan, and a couple of other pertinent details that you're going to need to know. All right, so let's jump into conventional loans. So conventional loans are going to be for anyone. Okay, so I can get a conventional loan, your grandmother can get a conventional loan, your neighbor down the street, they can all get a conventional loan. An investor can get a conventional loan. Now, these loans are backed by private investors. So this is an important thing that you need to realize, is they're not backed by the government. They're actually backed by a group of private investors. The minimum down payment requirement for these loan types, for this conventional loan is 3%. So you need to bring at least 3% to the table when it comes to this particular loan type. Now, when you don't put 20% down, obviously you're going to have mortgage insurance associated with just putting down 3%. Now, I will say that the conventional loan is the only loan to where once you hit 20%, whether that be your home value has gone up by 20%, or you've contributed your payments and that amount has equaled 20%. So once that comes up, oh my goodness, this is live and I'm just so nervous. Sorry, guys. All right. So once you hit that 20% marker, you're going to need to contact your bank, because they're not going to say, oh, congratulations, you've hit 20%. Now you don't owe us any mortgage insurance. No, that's not going to be how it works. So you're going to have to reach out to your bank and see what you need to do in order to get your mortgage insurance removed at that point. Now, when it comes from an appraisal perspective, so the conventional appraiser is going to go out and he's going to give an evaluation of the home, and there may be some repairs that are going to be needed to be done, but there aren't any required repairs that are going to need to be fixed prior to closing on the home when you have a conventional appraiser come out. And I think that's why a lot of you homeowners or home sellers, that's why a lot of home sellers, when they're choosing between an offer that has an FHA loan or a conventional loan, they're more likely to go with conventional, because they know that the appraiser is going to be less strict when it comes to those requirements for the appraisal. Now, you are going to have a higher DTI, which stands for debt to income ratio, when it comes to this particular loan. So it's a little bit harder to get into, and also your credit score has to be higher than if you were to have, it has to be higher relative to the other loan types. So the next loan type I'm going to briefly touch on is the FHA loan. FHA stands for Federal Housing Administration. Now, the FHA loan, just like the conventional loan, is for anyone and everyone, and it's actually the most common loan type used in the United States for sure, and maybe, United States. We'll just leave it at that. We're not going to go global with that comment. So for the FHA, your minimum required down payment for right now is 3.5%. So you have to bring at least 3.5% to the table when it comes to the FHA loan. And there is mortgage insurance associated with this. However, there's not, most of the time, the mortgage insurance is going to stay on there for the life of the loan. So there's not going to be, anyone to say, hey, congratulations, we'll waive your mortgage insurance. That's not going to be how it works. So in most cases, you're going to have to pay the mortgage insurance for the life of the loan unless you decide you want to refinance at that point and maybe get into a conventional loan. Now, when it comes to the appraisers for an FHA loan, they are more strict whenever they're going through a home and they're looking at certain things. They have a list of repairs and things they're going to check out before they, not approve it, but before the bank can actually close on the property, the certain repairs are going to have to be fixed. And this is not only true for FHA loans, but they're also pretty strict when it comes to VA loans and USDA loans, because all three of them are government backed. Now, usually you're going to have a lot lower debt to income ratio for the FHA loan as compared to conventional, and your credit score is allowed to probably be a little bit lower for that loan type as well. So it's a lot easier for people to get into an FHA loan, which is one of the reasons why it's one of the most common loan types here in the US. So also, I want you to check out, I've made another video already talking about the FHA loan into more depth. And also, I have talked a little bit about down payment assistance programs and what you can do to try and get one. So that's going to be linked up here in the card. So check the circle for that. The next loan type is the VA loan. So for VA stands for Veteran Affairs, and just as the name says it, it's only going to be for veterans. Now, there is one exception, and we're going to kind of go over it. Now, just because you sign up doesn't automatically qualify you. So you have to serve at least 90 consecutive days of service during the wartime in order to qualify for a VA. If it's not during wartime and it's during peacetime, they require that you've served at least 181 days. And if you're a part of the National Guard or the reserves, you can actually qualify for this loan once you have met 6 years of service in either of those. Or here's the last kind of thing that I want to tell you about. If you're a spouse of a service member that has died or as a result of their service, or they have some sort of a disability, you should be able to qualify. The spouse should be able to qualify for the VA loan. The greatest thing about the VA loan and taking advantage of that is that they don't require any down payment. So 0 down payment when it comes to your VA. And there's also no mortgage insurance with this particular loan type, which makes it kind of a double win for the VA. It is backed by the federal government, but I will say that there are some fees associated with this particular loan type that you need to ask your lender about. Sometimes they can be waived, and other times maybe they can lessen the amount for this particular loan. They do have a lot more flexible debt to income ratios and credit score requirements because there is no requirement. So it's going to be up to the bank to decide what their credit score requirement is and what their debt to income ratio is for this particular loan. And a lot of times they can, I guess, cut you a deal because there's technically no requirements for that. And the appraisers for this loan type are going to be very similar to your FHA appraiser as well. So very strict requirements, or more strict requirements. My gosh, I can't say that right now. All right, your last loan type that we're going to touch on is the USDA loan. So the USDA loan stands for United States Department of Agriculture. So this is a government-backed loan, obviously backed by the Department of Agriculture, which is housed under the federal government. And this one is only for homeowners. So it's not for investors. It's only for homeowners who meet certain income requirements, which meaning, you can't make $1 million and qualify for a USDA. That's not how this works. So there's certain income requirements. And also the purchase has to be for a single family home. You can't purchase a duplex, a triplex, a quadplex, or any of the plexes. None of the plexes are allowed to be purchased with your USDA loan. And this other one is great because it requires 0% down. The other thing to note about this one, as far as requirements go, is that there are only certain areas that you can use this loan in. And I'm going to have a link in the description below. Most of the areas are going to be further away from the city in more of a rural agricultural area because it's backed by the agricultural department, right? So it's going to be in more of a country setting versus a city setting. Let's see, the last part, the mortgage insurance. There is mortgage insurance with this one. However, you can actually wrap it into your loan to where you don't have to pay for it up front. A lot of times they'll have you pay for the mortgage insurance up front, and then you have an annual fee that you'll pay onto it as well. But, or you can wrap it into the loan. So it's up to you and up to your lender as to the specifications for the mortgage insurance. And the appraisers for this loan type are very similar to, they're going to be looking at similar requirements that the FHA and the VA appraisers were looking at. So the seller may have to fix some things before you can close on the property, depending on what it is. Now, that's pretty much all that I have for our little live session today. If you have any questions about any of these loan types, feel free to leave that in the comment section below, and maybe I'll tackle it on another live stream for you. The other thing that I wanted to tell you is that if you need a lender contact, I have several local lenders that I use here in the Dallas-Fort Worth area. And if you are not in Dallas or not in Texas, or you're just in a completely different state or country and you need help locating a lender, I'm pretty sure that I can find a good one for you. So feel free to reach out to me for that. And as always, I hope you have a great rest of your day, and I will see you on the next one.